BlackRock's not a firm that raced into this market, right? And you guys have been very careful, very deliberate and thoughtful about digital assets. But clearly, there's a tremendous potential opportunity here in the whole way that capital markets work, the whole way that investments work, and the way money works. Maybe just take a minute to share your, bird's eye view. What do you see there?
Sure, and get ready because I'm going to ask you the reciprocal question. So get ready for that. But within BlackRock, as we think of everything, we think of it in the context of the whole portfolio. So to us, it's not like a standalone thing. It's when you're looking at creating a portfolio, how can this possibly complement, diversify? How could this help the outcome that someone is looking for in 10, 20, or 30 years? So we think about everything through the lens of the whole portfolio. We have been carefully watching, learning, trying to understand everything that's been going on for, 5 years, 10 years, whatever the amount of time has been. But we've been consciously choosing to have a strategy, but not yet implement the strategy. And what's interesting about this year, 2022, which was a remarkable year in so many ways, and through so many lenses, including through the lens of just fixed income and equity returns, it was one of the worst years, depending upon how you count, in, let's say, 50 years. But interestingly, it was the year that we chose at BlackRock to actually start implementing our digital asset strategy, the strategy that we had written over the past couple of years and chose to sort of like put in a pile and say, one day we will do this, but today is not the day, because we wanted to see certain things happen. And what's interesting is one of the things that we were carefully observing is where we are with regard to regulation. And when Ukraine-Russia happened, which obviously is a terrible tragedy, an incredible event for the world, but importantly, it also has a lot to do with digital assets in terms of it was an unprecedented sanctions regime. And clearly the concept of understanding how to manage money, the SWIFT payment network, all of those items wound up being front of mind across the whole discussion. And what we observed is, as that was happening, it would have been a prime time for governments to choose to really lock down on digital assets. And if anything, it seemed to be catalytic towards governments looking to regulate and have smart regulation associated with digital assets. And that really got us excited about the resilience and persistence of this as an asset class. And as we thought about our strategy, we as a company, we've launched a Bitcoin trust. We as a company have done a variety of things with regard to our relationship that we have with Coinbase and how we've taken our Aladdin platform and connected it with the Coinbase platform. Obviously, our relationship with Circle. One of the things I would observe is obviously a lot of energy among this audience is thought of, a lot of brain cells go into thinking about digital assets and USDC. But in reality, cash and how cash moves around, even for an organization like BlackRock in the institutional land, there's great inefficiencies. There's great inefficiencies even in today's world. You wouldn't think in 2023 there were great inefficiencies, but we see incredible opportunity for something like Circle, USDC, and those use cases to actually attack those inefficiencies. We see opportunities for different blockchain technologies to help with regard to some of the operating inefficiencies we have within our ecosystem. And importantly, as we look forward, we think there's a lot of opportunity for tokenization broadly in the capital markets. And there are great opportunities where there are things that take days that shouldn't take days. there are great opportunities. In my opinion, a lot of the world runs on legacy infrastructure. And everyone talks about, this concept of, can you believe that? Changing legacy infrastructure is really hard. And the reality is at some point it needs to happen. Mm-hmm. And I think with regard to tokenization in particular, as this legacy infrastructure ultimately needs to be replaced, it shouldn't be replaced like for like. It should be replaced in certain circumstances with new operating models.
Yeah.
So what do you think?
Yeah. Well, I mean, it's a great segue. I mean, I think as you know, like my background coming to this was out of internet technology, mm-hmm. internet software platforms, and kind of watching the world of open internet networks and software colliding with industries, whether it's the software industry or the media industry, the communications industry. And I think what captured our imagination 10 years ago was, and back then, 10 years ago, there were a lot of ideas that were, mostly, talked about in messaging groups and white papers about. There was Bitcoin, obviously, but there were a lot of ideas that were talked about, which is, hey, what if you could take these networks and you could issue assets on them, which is tokenization, right? What if you could deploy code that was, tamper resistant that could interact with those assets, smart contracts? And so, we looked at those things and said, and I looked at those things and said, I'm a technologist. These are just ideas on a napkin, but in 5 years, that's going to be here. I can mm-hmm. see that that's going to be here. And the implications were, wow, we're going to have kind of like a new infrastructure layer on the internet that is purpose-built for the primitives of the financial and economic system, and that you could actually start to build that up. And so, that was sort of inspiring. And to the comment about, to get there, it's a long-term thing. We couldn't do it all right away, so we had to kind of take steps to get the regulatory infrastructure, to get the access to the traditional banking system, so that we could even connect the existing world to the new world, and had to do those. And I think we're as we think about tokenization and the broader range of assets. Our belief was you got to start with the most base layer, which is digital cash, right? You have mm-hmm. to start with how do you take the most core unit of account, the most popular unit of account in the world, the dollar, and how do you make that usable as like an efficient protocol on the internet? And that was sort of the first problem to solve, and we're still working on that, obviously. I think as we launched USDC 5 years ago, so it's our 5th anniversary of USDC, it was like very early in the kind of blockchain, programmable smart contracts, and there were big ideas in 2018 about tokenization, but it was one of those things that certainly regulators weren't ready. And the technology was just so not mature. Yep. But again, we could see, okay, if we can get this protocol going and you can get developers building with this, that will create flywheels. And that certainly did. And catalysts in the market in 2020, 2021. And now here we are, kind of connecting the dots here to the discussion with you, which is there's now a very good understanding of the benefits of a shared ledger or a blockchain. There's a good understanding of the power of these kind of tamper-resistant financial contracts deployed in code, and there's now an acceptance that digital dollars that are well regulated, that are sort of backed in the way that we operate USDC is like, wow, okay, this is a digital cash that can interact with contracts that can now represent funds or that can represent other types of assets. And so we're right, in my view, we're right on the precipice of Real world assets is a phrase that a lot of people like to use. USDC is a real world asset, right? It's a token backed by a real world asset. We're right on the precipice of that, connecting to many, many new forms of utility and building that evolution, because I don't believe things just get thrown out. It's sort of an evolution that extends from, but then also manifests, new things that weren't possible.
And